Hi, welcome to today's morning report on Thursday, 21st of January, with me, Rich Perry, market analyst at Hantech Markets. The European trading session's got off to a slightly positive start, but considering the massive selling pressure we saw yesterday, these little unwinds are not necessarily to be unexpected, but it's not really too much in doing. We had a significant unwinding yesterday from huge losses actually on Wall Street into the close. We saw a bounce. But again, I don't really see it as being very sustainable. It's interesting actually because what we have got on markets is this, or on the oil price, is a slightly positive move from yesterday's huge losses. 7% lower on that oil price yesterday, big decline. Now we had the unwinding of that move because of a contract rollover. The February futures contract expired yesterday, and subsequently the market rolled over and sort of had a bit of a technical realignment of the price. But I don't see that as anything to really get positive about. The fundamentals are still the same. Just everything is very weak on the oil price, and I think that this early bounce in the European session is going to get sold into. Any sort of sign of positivity at the moment is just being pounced upon by the bears and getting sold off risk assets generally across the board. I don't see there being any light at the end of the tunnel quite yet. Let's just look at Treasury yields. Again, yeah, the Treasuries. Demand for safe haven assets continues. 10-year Treasury is still lower, and also the 2 years are not showing any sign of picking up. So certainly these prices are very weak. These bond yields are very weak, and there's a bit of a sort of consolidation, I suppose, on the dollar on a trade-weighted basis, but that's come as the euro has sort of basically gone sideways in the past few days. I'll talk about that in the chart analysis in a bit. You've also got the ECB today. ECB meeting, not really expected to do anything. You had a 10 basis point cut to the deposit rate last time out. And you need to see the impact of that filtering through, so see what actually that has done to the system, and the ECB is unlikely to do anything really to sort of do anything more than that. You could well see that Draghi could well try and jawbone the euro lower again, but other than that, I don't really see a great deal coming out of this ECB meeting today. We've got a fair bit actually of data other than that. Let me just find it. Jobless claims from the States at 130. Expected to come in at 278, so slightly weaker than last time, but again, not doing a great deal to change things there. The Philly Fed index. Now, this is an interesting one because this the regional Fed surveys have been weak in the last few months, really, and the Philly Fed is one of the weaker ones. -5 is the expectation there. Anything below zero is suggests below trend growth. And certainly -10 is not a positive figure in any way at all. Now -5 again would be negative, and continuing that sort of negative theme that we're seeing throughout these throughout these Fed surveys, and that could well have a driver of sentiment in this afternoon. We've also got the oil stocks now, the oil inventories report. Now the expectation is for plus 2.7 million, which is again an inventory build. Now the big important number last week that sort of threw the oil price into a tiz to the downside was the again the incredibly high instance of gasoline stocks. And the expectation is for 1.6 million barrels this time out, so back into more normal levels. But certainly, if that level comes out high again, I think we could see another big sell-off on certainly the WTI contract. Could have an issue there. And that takes me to my chart of the day, which is the DAX. Now, as I was speaking about sort of equity markets, and what we've actually seen as I've started talking is the DAX gone negative on the day. And I don't think this rally on the DAX is gonna, or I say rally, it's actually gone negative now. So the early gains on the DAX are to be bought into. I think it's going to be sold off. I don't see anything really as being positive. Now the aspect I'm sort of focusing on here is this fib level, 76.4, and that's 76.4% of this big October to sort of April rally that we saw on the DAX in 2014. Sorry, October 2014 to April 2015, that big rally of sort of 6-7 months. That's been continued to be retracing, and look how many times the fib levels come in as key levels on this chart. So this is a key low now that is being tested on the DAX. I don't necessarily think it's going to be able to survive it. I see these momentum indicators as being very weak, yes, but also further downside potential. That sell-off in August, which we're having a similar style sell-off at the moment, very strong negative downside momentum. That sell-off on August got to 20. Currently 30 on the RSI. Momentum on MACD lines and stochastic still very bearish. So rallies are being sold into. Look at the hourly chart. You can see a fairly typical stepped decline of a bear market. You see this old support becoming new resistance. So these old levels of support continue to come in and act as new levels of resistance. And again, that's what we're seeing. 94.90 on the DAX. That was sort of the old support of the end of last week, early this week. Again, that's coming in as your basis of resistance. So 94.90 is your sort of sell zone now, I think, on the DAX, and I think it's going to be retesting those lows of that fib level, which is 93.08. Yesterday's reaction low was 93.15, so that is a support in place near term. Can it survive? I don't necessarily think it is going to be able to. I think the selling pressure is quite significant in this chart. So I'd be looking to use any sort of rallies on the DAX as a chance to sell, and it seems to be that that's likely to be playing out across markets now. Any rallies are a chance to sell because these bear market runs are not showing any sign of reversal. And I'd be sort of fairly concerned at any sort of improvement in these sort of riskier plays is probably going to be pounced upon as another chance to sell, and I think the DAX is one of them. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.